Thanks so much for tuning in to India Market Close right here on NDTV Profit. And it's the final day of Lord Ganesha's 11 days of being here with us. I call it 11 because we do it a day earlier as well. And today is the day when he leaves. In fact, there will be a Visarjan right in our studios as well. So looking forward to that. But the markets, well behaved, you have to admit. I mean, just about 46 odd points in the green for the Nifty. Bank Nifty, okay. Mid caps and small caps on your screen next. And there too, the performance has been very, very flattish. You didn't expect too much different, you have to admit, simply because the penultimate day to the Fed decision. We'll get to know about it tomorrow evening, remember. And later on in the show, viewers, I'll tell you exactly how the tape has played every single point of time. There has been a bit of a rate easing cycle. So that you have to bear in mind. Let's get the heat map up on the screen and show you what's moving and what's not. Well, some weakness for Tata Motors continues, HDFC Life continues. Adani Port is now the new entrant in the top 5 losers. Eicher Motors, Tata Steel. So that's the set of stocks that's largely remained weak through the day today. What's done well? Hero MotoCorp and Bajaj Auto. So at least the other two-wheelers have done well, even if Eicher hasn't. Bharti Airtel, another 1.5%. Mahindra & Mahindra gallops in trade. NTPC, Cipla, Britannia, some of the others that have stood out. A fairly disparate set of stocks moving today, but there are no trends really out here in the large cap space. Trends, if any, at the broader end of the spectrum. And the BSE 500 list of winners and losers will come up on your screen next. Mighty different from what it looked like yesterday, though you admit that maybe a Century Ply kind of stood out yesterday too, but Blue Dart, Century Ply, Nuvo, Covista, Sumitomo Chemicals, not too many newsmakers, but for a Thermax, which is continuing to move up in trade, and IGL, MGL, the duo, which have had a good move because of the UBS note. What's not done well? Triveni Turbine, down about 5%. Godfrey Phillips corrects today. Blue Star corrects. A bit of a correction in Suzlon. And then some of the pharma names, Biocon, FTC, Laurus Labs is in the red today. Not a lot of pharma names have done really well. So that's the other bucket to watch out for. Lastly, the listings. Let's just get them on the screen. And you see PN Gadgil, you see Bajaj Housing Finance, both of them will come up on your screen individually. As also, you'll probably see Cross Limited amongst the few that came out in the last 2 days. And this is, of course, PN Gadgil, about 60, so more or less in line. Cross 5% lower, continues to remain soft. And Bajaj Housing Finance, Tollin Star is down 5% as well, continues to remain soft. And Bajaj Housing Finance, 10% yet again. And then the brokerage calls that have come in today. So like I said, IGL, MGL, there is Ola Electric, which has seen an uptick, and there is Neogen Chemicals, which has seen an uptick. So IGL up about 3.8%. MGL 3.7%, Ola Electric and Neogen Chemicals are the other two. Ola is up 10%, Neogen Chemicals, the last one, up about 10% as well. So watch out for all of this. Let me take it to our guest. Aditya Agarwala is with us on the show today. Aditya, good having you. Thanks for taking the time out. Hope all is well. Are you trading the index at all, Aditya, or are you basing it completely on specific stocks?
Good afternoon, Niraj. Thanks for having the show. To be honest, I'm not trading the index at current levels because if we see the last 3 trading sessions, the market hasn't done much for itself. We are getting small real bodies, not much of a movement for the index per se. On the upside, 25, 450, 25, 500 is acting as a hurdle, and we are nearing an event, a very important event. So any negative surprises can trigger a negative reaction in the market as well. So for that reason, I will stay out of the index and also on several time frames, some of the indices are trading at overbought levels. So for that reason, maybe I'll trade stocks and individual stocks and sectors where there is a momentum and just stay out of the index, both the Nifty and the Bank Nifty. After a recent run up in the Bank Nifty as well, I think it's poised for a mild bit a pullback, at least from the Bank Nifty. And if we get anywhere 52,000 or maybe 51,900 in the next couple of trading sessions, that can be an opportunity to go along on the Bank Nifty. But as of now, staying away from the indices.
Okay. Kush, are you trading away from the indices as well, or are you trading the Nifty or the Nifty Bank? Good afternoon.
Good afternoon, Niraj. No, I would stay away, but gun to my head, if I were to trade an index, it would it would be Bank
Ahead of the
Nifty.
Fed decision, no guns to the head coach. So I'll leave you.
I am so glad. I'm so glad. No, I agree with Aditya's reasoning as well. That if you see, Nifty has not gone anywhere. 550 is the near-term target or hurdle, the way you look at it, for the Nifty. So the risk-reward ratio will not really be too favorable, in this event. Also, Bank Nifty, I have been constructive on for some time, continue to remain so. My only hitch is that 52,200, the level that we've been talking about. This was the second target that we spoke of at the start of this month for the Bank Nifty. That's been hit. But now there is a congestion zone from 52,200 to 52,800. Event is already there. The index is already run up. I think these couple of factors will make it a more interesting buy if we do have a pullback of about 300-400 points on the Bank Nifty, or we do meaningfully cross the 52,200 threshold and close above that. So at the moment, I think indices are a no trade. But as I said, the bias on the Bank Nifty, at least continues to remain positive.
Okay, let's take in stock ideas then. Aditya, I'll come to you first. Your top stock recommendations for the day today.
So I've got a couple of buy recommendations, Niraj, because there is buying seen in individual stocks. So the first one is Adani Green. Looks very interesting to me on the chart setup. After a good period of consolidation, stock is now getting ready for a breakout from an ascending triangle pattern. At current levels, I'm preempting a breakout clearly because of the fact that I'm seeing excellent volumes for last two trading sessions. For a target of 2160, I'll go long on Adani Green with a stop loss at 1830 on the downside. The second stock recommendation is from the two-wheeler space, which is Hero MotoCorp. Again, stock has been making higher rise, higher low constantly, and after a good bit of consolidation, stock is again into 52-week high territory. So at current levels, I will go long on Hero MotoCorp as well for a target of 6450 on the upside with a stop loss at 5700 on the downside.
Interesting. And both stocks fairly active today as well. Adani Green, of course, had a big move in trade yesterday too. Kush, what about your stock recommendations?
So hedge strategy, Niraj, given how the market is placed at the moment. So IEX was our call last week with a second target of 221. That's been hit. So you could take this as an update also and a follow-up, which is, the steady move on this continues and it's very impressive. The volumes are also very decent. On the days when the stocks ended lower, the volumes are actually shrunk. So this is suggesting that there is a fair degree of delivery buying and the sellers are, slightly weakish on this one. Although the stock is off the day highs, but that's understandable. I think from a near-term perspective, you could continue to hold for targets of 225 or 229, 225 and 229, and 215 is your stop loss. If you don't have a position, you could still consider, making one in IEX. On the short side, we've got BHEL. Now, if you'll recall, around 290, we had a short call on this. The stock is way off that mark, significantly lower. For the last 3 to 4 sessions, we've seen a bit of short covering bounce in this, but there's a possibility that, this might fizzle out. And the strong support zone is close to the 255 mark where the 200-day moving average resides. So 260, 255 are your targets on the downside, and 270 is where you place your stop loss. So IEX is a buy and BHEL is a sell.
Interesting. A buy and a sell call, balancing it out. No selling the stock of the day today. And you could argue you could have flipped between Ola Electric or Neogen Chemicals. We've chosen Neogen Chemicals to talk about because chemical stocks aren't quite doing well, but Neogen is. This comes after Avendus Spark initiated coverage with a buy rating on the stock. Varsha Johnson with the rationale behind this. Varsha, what does the brokerage house have to say?
Well, thanks, Niraj, for that. So we are speaking here about 125% upside potential that Avendus Spark has given to this stock. So they have initiated coverage with buy rating with a target price of 3,600. Now, let's see why the move. So Neogen is already an importer of lithium carbonate. So getting into electrolyte salt makes much sense. And so electrolyte salts are actually used in making of lithium ion batteries. But the battery chemical market, if you see, is a competitive market. So no company has an advantage or a guaranteed edge as per Sparks. Now, the domestic EV market, if you see, is a slow starter and battery demand is low now at around 10 gigawatts. But if the EV picks up, so we are talking about demand of around 52 gigawatts by 2030, leading to almost $715 million of opportunity. Now, globally, Neogen could tap into $3 billion of US markets and $2.5 billion of Europe market and $0.2 billion when it comes to Asia market. Now, if you see the Neogen's net debt, it stands at around 400 crore in FY24. Sparks is expecting this to inch up to 1700 crore by FY26 because of the capex which they are doing into the EV business. But Spark is not worried about it because if Neogen executes it well, and they are expecting a 46% CAGR when it comes to revenue from FY25 to 28, mainly driven by EV business, that is battery chemical business. Now let's see what are the risks that Sparks has laid down. So slow EV adoption, then EV execution, and non-Chinese competition are some of the risks that they have spread out. So technically it's a big opportunities market, big opportunities ahead, but challenges do exist. Now speaking about the valuation, so basically their CSM business, that is custom synthesis business, is around 15% of their revenue, which they want to take it to 20% due to the diversification when it comes to flavors and fragrance industry, and positive outlook has been given on the recovery of agrochem sector from H2 FY24. So taking into all this into consideration, considering the capacities that they are going into, the greenfield capacity, so they are expecting FY26 sales of around 1,280 crores with around 20% EBITDA margin, and considering the 10% PAT margin if you take, so we are talking about EPS of around 48. So on base, if I were to talk about the valuation considering FY26 basis, so we are talking about a multiple of around 37. So this is all we have on Neogen. So basically this is buzzing on the back of Avendus Spark that they have initiated a coverage.
Oh yes, indeed. And these days brokerage calls sometimes get some very strong reactions as well. Aditya, coming on Neogen, up about 11% and counting. Is there more here? It's a bit of a lone ranger. So I have to admit, Gujarat Fluoro has done a real good job last week too. So, but what about Neogen in particular?
I think there's a bit more upside here left. Can test levels of 1400 on the upside. On the downside, 1150 is a good support area. But yes, don't allocate too much of money here because of the fact that the stock has already shot up significantly in the past few trading sessions. But yes, the up move continues and 1400 can be seen in the near term for the stock for sure.
Kush, I'm throwing this out of the dark at you, but there is strength in Edelweiss. 2 days on a trot, it's done well today. The weakness has been bought back into the green today. Can it do more?
Niraj, considering what's happening in the entire space, a lot of names have already run up. Edelweiss is playing a catch-up game now. There is a possibility that it can do more, but similar to what it has done in the last month or so, that remains a little unlikely. But if you're a trader and if you want to play for the last, let's say 5, maybe 8% up until the levels of 140, 145. You could buy into the dip that you're seeing today. There was a gap that was created 2 days ago with the gap up opening that's been filled today. So that technical parameter also stands good now. So if you want to buy, your stop loss should be at 124. You're looking at targets of 138 and 145. So for the last about 8, 10 odd percent, 5%, if you want to do play the momentum, then yes, Edelweiss does have that kind of strength.
Okay. Well, new guest on the show, Hemang Jani. And let's talk about new kids on the block, because frankly, the big talking point for the last few days, weeks, months maybe new paper that is coming in. Hemang, good afternoon. Thanks for joining in. Gadgil today, Bajaj Housing Finance yesterday. In fact, Bajaj Housing Finance today as well. A slew of others that have done well. What's your view on the primary paper, and particularly, let's say Bajaj Housing Finance, who a lot of people may have got an allotment, or may not have gotten an allotment but may have been wanting to buy. What does one do with this one?
Good afternoon, Niraj. I think the party continues in the primary market and no real complaints except the fact that the exuberance is too much. And while, the valuations are definitely on a higher side, the only good part about some of these companies is that they belong to a very credible kind of a business group, and there is a very good business model in place at the ground level. So in bull market, people tend to kind of forget or ignore valuations and how big the story could be. But that's the typical nature of the market, and we have to accept that. So I think, as long as this party continues, I think, we should really try and participate to the extent that we can. So now that, let's say, in case of Bajaj Home Finance or, this PN Gadgil, I would reckon that having seen this kind of exuberance, we should really wait for a good entry point rather than chasing the momentum. Because typically you see wild swings in the newly listed names as wild as 15-20%. And recently in case of 2 or 3 such primary issues, we had seen that post listing the stock corrected almost about 25%. So I would be more comfortable buying into, let's say, a Bajaj Home Finance somewhere close to about 155, 160 zone rather than chasing at this point of time.
Okay, so Bajaj Home Finance, Bajaj Housing Finance, you mean, Hema? You would be comfortable in buying into?
Yeah. I'm talking about Bajaj Housing Finance. I would be more comfortable buying in the range of about 155 or thereabouts rather than chasing because of the kind of run-up that we've seen in the past 2 weeks.
The problem is that there is such a sense of FOMO, for the lack of a better word, for Bajaj Housing Finance, that no one is sure if you'll get that opportunity. You know, you have a Phillips Capital note out today which has set a target price of 210. So yeah, at some point perhaps you'll get the opportunity. My point is that is it and there's so many more coming in. So I want to ask your view and focus of the IPOs which are actually going to come in further down the line. Everyone's going to wait for the next Bajaj Housing Finance like opportunity. Is there any primary paper that you are looking forward to?
Well, the biggest issue that I am looking forward to is NSC. Let's hope it gets clearance from SEBI very soon. Because sometimes what happens is that, let's say in case of Bajaj Housing Finance, first you saw action across most of the housing finance companies, and even the NBFCs as a whole, sector got re-rated. And then when the listing happens, there is a certain amount of excitement that gets created. So in anticipation of the NSC IPO, we have seen a fairly good action across BSE, MCX, even IEX. You may or may not call it a genuine exchange platform, but there is a fair degree of action over there also. So I think this is something really very exciting for retail investors. And NSE, given the positioning that it has, the kind of volume growth that we have seen in the markets, be it new listing, options, futures, cash, and more importantly, the kind of subsidiaries it is sitting on, I think it presents a great opportunity for all the investors. So looking forward to that IPO very keenly.
Okay, I mean the NSE IPO, it'll just be madness if we're seeing this kind of frenzy for Bajaj Housing Finance. NSE is going to be certainly chaos. But I'm wondering, just talking about BSE then, because looking at the run-up that BSE had yesterday, and we'll pull up the BSE stock now, ahead of whenever this happens, how do you like any of those exchanges? Kush, let me come to you. BSE, after its massive run yesterday, has seen a bit of a slide. In 1 month, about 26% up. Would you look at a BSE just basis charts?
For sure. The stock had a very good run, but then, a news or two came out and then it consolidated for a long time. That I think from a technical standpoint, at least, was very healthy for the stock. It even went all the way down to the 200-day moving average, spent some time there and then rebounded. I think on the whole, this universe is, doing very well. Very stark possibilities that it could continue to do well, may not be like a secular one-way run, but these volatile moves, with bouts of correction are very much welcome. I think if you don't have BSE, you should include this in your portfolio and hold it for some time. From a trading perspective, I think 3,600 is a fairly reasonable number on this. On the downside, you're looking at the stop loss close to 3,200, which the previous high was. That resistance will now start acting as a support. So on the whole, very constructive on BSE. Any kind of dip should actually be taken as an opportunity to accumulate or add in your portfolios.
Okay, let's talk about some other buzzers today and basis notes actually. I mean, I'm sure Ola Electric was one, but the other one is MGL and IGL. UBS has given a positive outlook for both Mahanagar Gas and Indraprastha Gas. Meka joins us with the details.
Good afternoon. So the buzz around IGL and MGL is mainly on a UBS brokerage note. What UBS has noticed a consolidation in the CGD, which is the city gas distribution sector, and expects this consolidation trend to continue because of the pressure due to infrastructure targets, gas sourcing challenges, which will be the key drivers. And they state that IGL and MGL have stated an intention to participate in this trend. Now, for Indraprastha Gas, they've upgraded the rating from a sell to a buy at a target price of 700 rupees, which implies a 32% upside to the previous close. Infrastructure expansion as well as new geographies are expected to drive volume growth, and they've raised the FY26 and FY27 volume estimates by 1 to 3%. They've also stated that Indraprastha Gas does not currently reflect inorganic growth opportunity in its valuations, and that the market is pricing too much of an EV risk. For Mahanagar Gas, they maintain a buy rating and have raised the target price to 2,400, which also implies a 31 to 32% upside from the previous close. They expect elevated volume trajectory to sustain in coming quarters, and they've raised both the FY25 to FY27 total volume expectations as well as the EBITDA per unit expectations. In terms of Mahanagar Gas's valuations, they do not view that Mahanagar Gas's valuations are demanding, and they stated that the stock does partly reflect some inorganic growth in its valuations.
IGL, MGL both doing well today. I mean, of course, they pale in comparison when you compare to what an Ola is doing. But all right, IGL, MGL both having a good day. City Gas Distributors is something UBS is bullish on. Himang, do you share that view at all?
I think, if you see the hardcore numbers, IGL, because of its presence only in the NCR region, actually the growth in terms of volume was not that good. And even if you look at the vehicle registration data, there was no growth whatsoever. Now, if one is really making out a case that there is going to be a geographical expansion and you will have, growth come through from consolidation, etc., I honestly don't have a very specific logic or data points to believe that. Typically, unless you see that there is a great amount of visibility on the volume growth, and when you're talking about a volume growth from 4.5% to almost 8%, it is almost about 90 to 100% kind of a growth. So I don't see much of justification in these kind of growth numbers. Typically, people do want to participate in stories which have really not performed as much because, if you look at the aggregate market, there are hardly any pockets where you can make out a case that, okay, there's a genuine story, etc. So people look out for laggards or, the stories which have not really done well. So not too positive on that space per se. I would rather, look out for better opportunities outside the city gas distribution at this point of time.
All right, so we're talking about the other brokerage buzzer, and that's Goldman Sachs, clearly, which has a buy rating on Ola Electric with a target of 160 rupees. That's a 48% upside. The stock just flying today, already 117, 10% up, 9% up nearly. So the reason why Goldman Sachs is so bullish is they say that Ola Electric is building a local formula for giga growth in electric two-wheelers and are positively levered to long-term trends in India's electric two-wheeler market. Their in-house battery manufacturing, launches by incumbents are key factors. This is something that a lot of houses have reiterated. Remember when we spoke to Ola Electric as well, they're talking about this in the first quarter of next year, or the first calendar year quarter of next year. It has been pushed back though a couple of times, but that's going to be the big change. Goldman Sachs expects the EBITDA to break even by FY27 and expect FY24 to 30 revenue growth of 40% CAGR for Ola as well. I'm going to come, I don't know what the technical analyst, perhaps not enough data to talk about Ola, so let me come back to Himang on it, since it's a fairly new listing, so I don't think too much data on the charts. But Himang, in this whole electric vehicle story, do you think Ola has an advantage as a front runner? Because the other view is that the moment the larger players come in with dominance, they can wipe out the market share that Ola has fairly easily.
So while there is a certain degree of excitement because of the timing and the fact that the EV story in India is still at a relatively early stage, and we'll see a fairly decent growth over the next 3 to 5 years. And when you look at the comments from the players like Bajaj, TVS, Hero Motors, even Maruti for that matter, they are saying that a large part of their growth will happen from the hybrid or the EV vehicles. So Ola certainly has an advantage over there, but given the kind of valuations and the fact that the profitability is far off from where we are right now, I have always been of the view that it makes more sense to be with the incumbent players because companies like Hero, Bajaj, TVS, all of them have a decent amount of presence on the EV side also, and Bajaj has done so much better on the CNG side of the game. So it makes more sense to be with them while the returns may not be that great because of the emerging category of this company Ola. But for a stable 15, 20, 25% kind of a return, I think the incumbent players make more sense rather than name like Ola at this point.
What would be your top pick there in the incumbent players?
So my top pick would be Hero Motor, followed by TVS. Because still in case of Hero Motor, the valuation is not out of whack. And I do think that given the fact that two-wheeler as a space is doing well, it makes more sense to be with these two names.
Okay, what about you, Kush, on TVS, Hero Moto? Which do you prefer, or if I add a Bajaj there as well?
Oh no, this is where technicals meet fundamentals. Bajaj has had a very sharp run up, no signs of correcting just yet, but the risk reward ratio will not be favorable anymore at this juncture. So any kind of pullback towards 11,500, perhaps even a little lower, 11,300 should be a good entry point. But at the moment, Bajaj, if you've got it, then ride the momentum, pardon the pun. But otherwise, no entries now. TVS seems to be doing well. It's consolidating, perhaps like most other stocks. This is also waiting for the big event to be out of the way, before it breaks that resistance around the 2850 mark. So this is the one that you can consider. But among the three, the one that tops my list is Hero Moto. 5,900 was the resistance. It's taken that out very comfortably today on the back of volumes which are higher than the monthly averages. So if you want, then you could still consider this one. On the upside, you're looking at a 6,200 and a 6,350 kind of levels as your target, and 5,800 thereabouts. The resistance will now start acting as a support, so that's your stop loss.
Aditya, what about you? What is your sort of list and rankings as far as two-wheelers are concerned?
I do like Hero Moto as well. And in fact, I had suggested buying Hero Moto Corp at the start of the show. So I think Hero Moto Corp definitely can be looked at. On the flip side, if I just look at Ola Electric, I think it makes sense to go long, even though there is limited data. But whatever data I see on the charts, I think after a good run-up, stock went into a consolidation phase with a stop loss just below the recent close of 105. One can actually look at going long on Ola Electric at current levels and look for a target of at least 150 to about 160, which was the previous high for the stock. So I think both the stocks, Hero Moto and Ola Electric, can be bought at current levels, purely going by the chart setup.
Okay. All right. We'll take a very short break, but stay tuned. We have a special deep dive coming up on the other side where we get you a bull versus bear scenario into what I'm sure is the biggest talking point in the market right now, Bajaj Housing Finance. Stay tuned for that.
back with India Market Close right here on NDTV Profit. Just take a quick snapshot. Remember, it's not a very active day from a broader end of the spectrum space, but I mean, I think the IPOs are the ones which are ruling the roost, even in terms of large trades or otherwise. It's effectively all the new kids on the block which are featuring in this list. And Gadgil, of course, stands out by virtue of the fact that it's the first day. But Bajaj Housing, yet another 10% upside on that one, whether we like it or not, and the others. But anyways, speaking of Bajaj Housing, since it continues to see gains in today's session, we thought, why fight the party? Why not join it and talk about Bajaj Housing a little bit more? The point is, are there some causes for concern in the stock despite the run-up, or is it a blue sky scenario? So Harsh joins in with the bull view, and hey, Harsh joins in with the bear view as well. Harsh, tell us, what are the arguments for and against?
Well, never a complete blue sky, right? So, bull versus bear on Bajaj Housing. First off, with regard to growth, there's been very, very solid growth that Bajaj Housing has seen on its AUM portfolio, 72% CAGR till FY24 in terms of AUM growth compounded annually. And the current growth also continues to stand at 30% plus. Well, the flip side of it, you have a 1 lakh crore book now. So can you continue to sustain that kind of growth? Not so sure. And as the base keeps increasing, that will be tougher to come. That 30% kind of number, not sure if that can sustain. Also, increased competition as penetration continues to increase. But the other focus is definitely profitability. Well, Bajaj Housing has stronger yields due to the top-up loans that they offer, but with it also comes higher risk. As of now, you're not seeing that risk translate, but if that would translate, you could suddenly start to see the bear case on that start to play out. I'll stick to asset quality even on my next point when it comes to construction finance. In terms of growth, construction finance is something that Bajaj Housing will likely lean on to continue to push growth because it's chunkier loans, right? And therefore, that increased reliance will also come at an increased risk. But what Phillip Capital seems to be suggesting is they will grow it only at 8 to 10%. That's what they are building in their numbers. Mind you, Phillip Capital has expected the balance sheet to double in 3 years. So they are also expecting growth at 25% and likely not 30+%, just for context. Last off, with regard to valuations, Phillip Capital has given this a target price of 210, while it is also the most expensive housing financier already. On day one itself, it was the most expensive housing financier. Why is that so though? One of the reasons for that is that the anchor lock-in leaves very little room for liquidity in the stock. The anchor lock-in largely comprises of 4 to 5%. Mind you, the promoters haven't diluted in a big fashion. They continue to own 89% of the company. And therefore, the free float is extremely small. In fact, when you look at the NSE, the number of shares available, or rather demanded by investors, is roughly 2.5 crore shares, whereas there are no sellers on the NSE, at least on this stock at the moment. Also, the bull case, as per Phillip Capital, they have assumed 210 to be the price basis, a price to earnings multiple of 30 times, which is 30 times they've come to basis a 20% discount on one standard deviation higher than Bajaj Finance's price to earnings multiple. And that's what they've really taken as the number. Therefore, that's how this plays out. Just in terms of price to book, here's some context. You look at Aptus, which is probably the second priciest in terms of housing financiers, and Bajaj Housing standing tall, twice of that in terms of price to book valuation. So something to take from all of this, I hope.
Most certainly, a lot to take forth. But you know, this is the thing. I mean, maybe some of the companies, the larger ones, have remained the most expensive names in their particular sectors, but have continued to do well. Call it a Dixon in that side, or Trent, which another 1.5, by virtue of being another 1.5% higher, would probably easily qualify as the most expensive retail stock, but well, continues to march higher. So really strong show. Now, because we've discussed Bajaj Housing Finance at length, I want to talk about some of the others. And Trent comes in as a case in point. At 7,400, fundamentally, Hemang Chani, it is arguably one of the most expensive liquid names. Maybe there is an Avenue Supermarts with features there, but it's not quite retail, although you could argue that it's a different form of retail, but entirely a retail story. So what do you do with the Trent and Avenue Supermarts and some of the others, but Trent in particular?
Niraj, typically, in a bull market like what we are witnessing right now, you will come across, certain companies, certain themes where companies would deliver on the growth, or companies which are doing much better than the consensus market expectations. There is going to be a chase, and people are willing to give much higher valuations to such companies. So if I have to give you a few examples of such companies, it would be something like, of course, Trent is top in that game, Indigo, and you also mentioned DMart, but DMart, the growth has not been that great. While they've been, consistent in terms of wealth creation, I think that the growth that DMart has posted, at least in the last 2 years, has not been that great. So I think exchange for that matter, let's say something like a BSC from about 1200, 1400 rupees, it has become, about 5-6 bagger kind of a story. So there are certain pockets where you will see this kind of a performance, and because of the growth that they're delivering, market is willing to pay them higher valuation. So if you were to ask me about my view on Trent, it would be a bit difficult for anybody to justify buying afresh. But I do think that as long as they deliver a 40, 45, 50% kind of a growth on the top line and bottom line, the company will continue to deliver. So I would be comfortable holding on to Trent. If I have to buy afresh, maybe I'll buy in 2 or 3 parts.
Okay, fair call. Yeah, but the rally, though, you have to admit, and I take on board Hemang's point. The question from a trader's perspective is that every single point of time this stock starts looking like it's becoming topish, it then tends to move higher. I mean, 12 months, 257% is a seriously strong run. So the question that I have, Aditya Agarwal, for you is, would you go out and trade this now? At the current juncture, would you go out and take a fresh bet, whether a long or a short, on a Trent, maybe some of the other retail players?
Definitely not needed. To be honest, the kind of overbought levels that the Trend is showing, purely going by the chart setup, I wouldn't stick my neck out and buy the stock at current levels. I can't justify a risk to reward at current levels. Maybe if I have to pick a stock, DMart would be one which offers a good risk to reward. But again, on the upside, my targets could be at max 5,800 to about 5,700.
Okay. And talking of expensive stocks, I mean, there's a beautiful conversation that we had today with Ravi Dharamshi, wherein he was talking about how some stocks which appear expensive actually are cheap because the earnings growth more than makes up for it. You need to build a hypothesis, of course. So he was giving example of Titan earlier in the conversation, and then he loaded on to talk about the EMS space, wherein stocks like Dixon, Keynes, etc. are looking expensive. Hear out a small slice of that conversation that we had with Ravi Dharamshi.
They are factoring in a lot of the future. So there is a risk to the extent that what if the future is different than what the stock prices are suggesting. However, I'll just give you a framework on how we think about it and how we attach probabilities to the outcome. And that might give you some sense on how to evaluate this. So 2-3 years back, when this sector was actually getting born, or where new companies were getting listed, at that point of time, this valuation concern was actually totally not required. Why? Because, see, we tend to track a lot of these trends on a 10-20 year horizon, but only when they cross a particular inflection point that we bring it on our radar or make it into part of our investable universe, is that the growth is going to pan out in the next 5-7 years and not in some 10-20 year horizon, which might not be my investment horizon to begin with. So when government in 2014-15 started talking about Make in India, and then they came out with a policy for electronic manufacturing, we knew that this is the beginning of a particular mega trend. However, we waited until Samsung came here, Apple came here, once the OEM started coming here, and of course, we all start with low-end assembly work. And then the ecosystem around it started developing. That's when you keep your eyes out for companies where there is some differentiation, where they are showing some signs. Who are these large OEMs beginning to work with? Those are the companies that you should be focused on. And then you have a reference point, how this particular thing has panned out, whether in China, whether in Taiwan. And someday we will have our own Pegatron, Winstron, Foxconn out of India. Yes, there is all possibility and likelihood that we will have, because government has created that required ecosystem and the required ingredients from where the entrepreneurs can actually start charting their own path.
Okay, so that was an interesting view from Ravi Dharamshi, but at this point, nearly 15 minutes and a little more for market close, the focus is now going to shift on hedging your positions ahead of the Fed meet. And Hemang, just let me come to you on that part about how banks, IT will be in focus, you think, next two trading sessions?
Yes, clearly, there is going to be a, overall focus on the rate cut. What kind of rate cut do we get? What kind of market reaction the US will have post that announcement? And I do think that a large part of the positive news coming from the rate cut are in the price. So you might see a little bit of, a negative reaction if it is just 25 basis points, which is what widely the market is expecting. But I think as a part of the sector rotation, I definitely think that, banking should remain quite, stronger. We are seeing a bit of a stability and a positive action in names like ICICI Bank, Axis Bank, and even HDFC Bank. So I do think that as a rotation, theory, you will see some money moving back into the banking sector.
It is a very important next 48 hours or less than 48 hours, because the Fed meet begins today evening Indian time, and by tomorrow evening or tomorrow late evening or night Indian Standard Time, we'll get to know what the Fed has decided. Now, it's important to put this into perspective. Market is currently pricing in a 62% possibility of a 50 basis points rate cut. This has moved up because about a month ago, maybe, the probability was a much lower. I mean, it was about 25% 1 month back. This is, as per, of course, data available. So this is part one. Now, let's move on and try and talk about what are the key things that people should keep in mind when you look at the history. So in 2001, which is the one period of rate cuts, the Nifty fell 35% after falling 25% in the year of 2000. So when you're thinking of what the index strategy should be in a rate easing cycle, keep in mind that in 2001, the index had fallen. Actually, a fairly similar performance, if you will, or at least a fall that happened in 2008 as well. That will be the next one that'll come up on your screen. Nifty rose initially, but plunged 60% in 2008. The only difference, viewers, is that both in 2001 and 2008, or the 2000-2001 and 2007 and 2008 period, you had massive economic woes in the US and otherwise. The GFC happened, financial crisis in 2008, Y2K, post-Y2K period in 2000-2001. So therefore, that also had to play a part. In 2019, the index had stayed absolutely flat in the easing cycle. Now, let's compare the context of what was the case in the different years. So in 2001, in the second period, 7-8, 2019 in the current period. The Fed outcome, rate cut, rate cut, rate cut. Here we will see a rate cut 2 days from now. Trailing P multiples for the index, our markets. 15 times in 2001, 20 times 2007-8, 30 times 2019. Currently, you could argue we are about 31 times trading earnings. So this is part one, trailing P. What about some of the others? Let's say the price to book, market cap to sales. So trailing price to book, 1.7 times in 2001, about 4.5 times in 2007-8, 2.9 times 2019, currently at 4.8. So you can see that even on this parameter, we are at the highest level relative to the past. And market cap to GDP as well, we are almost comparable to what the situation used to be in 2007 and 2008. So could there be an encore? History may not repeat, but can history rhyme? It most certainly can. Like I said, the only difference is that 2007 and 2001 were completely different periods from an economic growth perspective. This time around, it's not so bad. The last thing that I want to mention, well, what should their strategy be? So, for example, Nuvama has put out a note, and they are saying that they maintain large defensive bias. Expensive cyclicals like industrials, PSUs, autos, and metals are most vulnerable, a la IT in 2001 and cyclicals in 2008. They have a more defensive bent. Cash cows, insurance, and some of the others, and private banks are the ones they are the most overweight on. So this is the long and short of the data that you should keep in mind when you're thinking of an index strategy in a Fed easing cycle.
Yeah, absolutely. And that's what everyone's focus will be on. I think the other factor is whether we will see an increase in foreign fund flows coming in post the Fed meet is out of the way, and a subsequent correction in equities, in Indian equities due to rate cuts. If there is one, will it be different and will it be shallow? A very interesting take on this from Shah of Kotak Mahindra AMC. Listen in.
I'm sure you would have seen a Lagan movie where local team defeated English team. We are seeing Lagan playing out in our market every day. First, we saw one day international during COVID time where April, May, June, July, August 20, foreigners came and dumped about 70, 80,000 crore. They just wanted to exit, so there was no price limit. And retail investor kept on supporting mutual fund via SIP. And we kept on buying. And finally, foreigners conceded defeat. Then they realized that one day international is not where we can win. So they came to play test match. Between October 21 to June 22, they sold about 250,000 crore worth of equity. Again, retail investor kept on supporting us. Don't worry, we are sending our SIP money. Just keep on investing in India growth story. Eventually, foreigners tired out and then they withdrew from test match. Then they realized that we can't win against retail investors and mutual funds in one day or in test match. So let's come and play T20. So on the election result day, they came to play T20 and one single day they sold more than 20,000 crore. Now this time retail investors said, mutual funds, you move out. We'll give you some money. You can do what you want, but let us play directly. They pumped more than 20,000 crore in a single day to take out all the foreigners selling. Now with this kind of domestic participation, you can very well guess what kind of corrections will come and how swift it will be. The point is, in this market, we do expect limited downside for quality stocks, for high floating stock counters, and for reasonably valued stocks. The wall of money cannot stop overvaluation to get corrected. We have seen that in 90s, we have seen that in 2000s, we have seen that in 2008. Money alone cannot support stock prices for long. At the end of the day, stocks are slave of earning power. So my feeling is that the correction for the broader market will be limited, will be shallow, but there are stocks where corrections will be painful, as in when supply emerges.
Well, let's take in closing strategies now. Before we talk more, Kush Bora, I'll come to you first. Your top BTST or STBT as the case may be.
BTST in this case. Shriram Finance continues to do well. It's trading on the positive side. Mild profit booking, but that's understandable. But the volumes are very encouraging. So from a near-term perspective, 3,500, 3,575 are the targets to look at. 3,350 is where you place your stop loss. So Shriram Finance on the long side.
Okay. Aditya, what about you? Your top closing strategy?
I've got a couple of buy recommendations again, Niraj. ABB looks attractive to me on the chart setup. So it's a buy for a target of 8,300 with a stop loss at 7,650. The second stock is MFSL. That too looks interesting. Continues to make higher highs, higher lows. For a target of 1,250, one can initiate a fresh long position here with a stop loss at 1,100.
Okay. Hemang, some of the brokerage linked names have made a spurt in the recent past. I mean, we've seen the last few days, JM Financial, Edelweiss, a couple of others starting to move around. Convinced about the capital market story, or brokerage is not the best way to play it?
I do think that given the kind of exuberance that we are seeing in the capital market, both on the cash and on the derivative side, there is going to be some excitement for the exchanges and for the brokerage firms both. Within the brokerage firms, I think, Edelweiss, because of the possible delocking of the Nuvama stake and couple of other companies, you might see some more upside. So I think that's more of a special situation or a tactical play. And I do think that IIFL would be one stock that one could really look at it, given the fact that it has not participated as much versus some of the other brokerage names. So that is where I think there is a case for some sort of a re-rating over there.
Okay, today's contrasting fortunes for a Suzlon versus the Inox twins, simply because otherwise the fortunes are there linked to the excitement within the wind energy equipment space. But today Suzlon is down, but Inox Wind and Inox Wind Energy, both of them are up and about in trade. 4.5%, if I'm not wrong, currently for Inox Wind Energy. Power equipment, Hemang Jani, are you constructive here or are the valuations prohibitive?
I think the overall story there continues to be good, but I would be more comfortable, into the larger names, something like ABB, Siemens, which have a much more diversified portfolio, and this is across railways and capital goods and related stuff. So the feel is that many people thought that capital goods as a space is kind of, the valuations are too high and the growth may not sustain beyond a point. But my understanding is that given the larger capex across the pockets, this theme will stretch itself for another couple of years, and the stocks have cooled off a bit from the top that they made. So both ABB and Siemens are the companies that I would be comfortable buying into even at current levels.
Okay, that is some of the focus for tomorrow, but just to widen it, we are over the next few days going to hear a lot from the Modi government and key ministers for the completion of 100 days of the government. This also becomes important from the point of view of a lot of capex announcements that are going to come in. And the focus, of course, on manufacturing. Now, in an exclusive conversation with NDTV's Editor-in-Chief, Sanjay Pugalia, the External Affairs Minister S. Jaishankar highlighted the importance of the manufacturing sector in India's growth and the need for strengthening manufacturing prowess. Listen in.
तो फाउंडेशन जो है, आधार जो है वो मैन्युफैक्चरिंग है. हमें मैन्युफैक्चरिंग को आगे बढ़ाना ही चाहिए. ऑर्थोडॉक्स माने जो नॉर्मल मैन्युफैक्चरिंग और कल की मैन्युफैक्चरिंग जो आपको लगता है न्यू एमर्जिंग टेक्नोलॉजीज, जैसे सेमीकंडक्टर हैं, जैसे ड्रोन है, जैसे स्पेस है, जैसे इलेक्ट्रिक मोबिलिटी है, पर साथ ही साथ आपको अपनी इंजीनियरिंग गुड्स, आपके जो बाकी मैन्युफैक्चरिंग जो है उसको भी ले जाना चाहिए, क्योंकि जब तक मैन्युफैक्चरिंग नहीं बढ़ेगी आपके यहाँ रोजगारी नहीं बढ़ेगी. तो मैन्युफैक्चरिंग बढ़ाने के लिए आज जो है मोदी सरकार ने प्राथमिकता दी है कि ये 12 इंडस्ट्रियल नोड्स पूरे देश भर में बने, और साथ ही साथ इसके लिए जो स्किल्स की ज़रूरत जो है, जो आपने देखा होगा कि जो फॉर्मल बजट, जो फुल ईयर की बजट जो थी, उसमें भी प्राथमिकता स्किलिंग के लिए दी थी कि इंडस्ट्रियल नोड्स भी आगे बढ़े, साथ उसकी इंफ्रास्ट्रक्चर आगे बढ़े ताकि गुड्स, रॉ मटेरियल आए, फिनिश गुड्स निकले, और जो ह्यूमन रिसोर्स की तैयारी जो है उसको कैसे आगे बढ़े.
Okay, so that was the word coming in from S. Jaishankar, the External Affairs Minister, of course, in an exclusive conversation with NDTV. But as we wrap up the trading day, it's been fairly lackluster, to be honest, completely flat on all ends on the indices as well. And sectorally as well, not much of a move. Let me just pull up Tata Motors to see what's happened there. Tata Motors has seen quite a bit of stress through the day, but that's also because of the DVR issue. Down still about 1.5%. We've been focusing on autos a bit, and Tata Motors taking a knock right since this morning. Let me just get a quick call from you, Aditya, on a Tata Motors at these levels.
Approaching its 200 DMA, Tamanna, so very interesting level to watch out for. I'll still wait before I initiate a fresh long position. If in trade tomorrow Tata Motor does hold on to levels of 950 or maybe 940 on the downside, I could look for a short covering rally all the way back to levels of 1050. However, if it breaks 940 levels, then maybe I'll wait for further correction in Tata Motors to initiate a fresh long position. Talking of short positions at current levels, no, I would avoid, because again, clearly it's approaching its 200 DMA, which has been acting as a major support level for the stock.
Okay, Kush, I'm going to come to you on an index call actually, and I know you've been talking about it through the afternoon, but looking at the levels that we are set to close at with the Nifty above the 25,400 mark, I know we're not seeing runaway gains, but we've not seen huge weakness either. What would be your position on the Nifty and the Bank Nifty, say for the next 2 days before a Thursday morning? Tomorrow is the day that you take that position. What would be your call? Considering that a 50 basis point rate cut is also something that is being contemplated.
That's what kind of worries me. What if that doesn't come about? Will the market take a 25 basis point? And, hence the word of caution. Ideal scenario on this would be don't take a trade. There are enough and more technical indicators suggesting that there could be pressure on the Nifty. But as I said at the start of the show, if you need to take one, then perhaps Bank Nifty is the index that you should focus on. The key levels on this one to watch for are 51, 600, 650, as a support zone. On the upside, you're looking at a 50 to 500 and a 50 to 800. So if I want to consider a long position, Bank Nifty is the index that I'll play with. Nifty for now, I will continue to just monitor. If I have an existing position, I will make sure that I place my stop loss close to the 25,100, 25,200 kind of support zone.
Got it. Okay. Aditya, Kush, gentlemen, thanks so much for taking the time out and being with us today on the show. Really appreciate your time.
Pleasure.
Let's start wrapping up the markets for you. Quiet as she goes. It's been that kind of a day yet again for the Nifty. So extremely flat. All indices flat. So no big changes there. I mean, you look at IT, banking, mid cap, small cap. It's been a flattish performance across. Let's get the heat map up on the screen and show you what's moving and what's not within the large cap space at least. So even Stevens, by the way, that's part one. And you can see it right here. It's HCL Tech and Infi bobbing between the red and the green. TCS just marginally in the green. So that's IT for you. What's corrected today? Tata Motors has been the biggest loser since moment one. Just that it's recouped some of those losses. There is weakness in Tata Steel, JSW Steel. So some of those ferrous commodity names have come off in the session today. Divi's corrects 2 days after gaining for 9 days. But aside of that, nothing noteworthy, if you will. On the gaining side, Hero MotoCorp and Bajaj Auto make their presence felt. Airtel, yet another day of gains. Remember, NTPC and Power Grid yesterday were up in trade. NTPC is yet again up in trade today. But autos selectively have actually been on the gaining side as well in the session today, and some bit of recouping of losses for select FMCG like Britannia, but not too much of action in the large caps, unfortunately.
Yeah, absolutely. Hero Moto is interesting though, and that whole two-wheeler versus passenger vehicle story playing out. I just want to pull up what the broader indices are doing in the last few minutes of trade, and nothing too great on the mid-cap either. Spot of weakness there actually. Not massively, but yes, definitely in the red. Same on the small cap, perhaps even worse. We'll pull up the advanced decline ratio as we have finally closed for the day. And yeah, while the Nifty happens to stick around to its levels, but you're seeing that the market breadth was definitely negative. So that cautious note ahead of the Fed announcement continues, and you won't know tomorrow either. So tomorrow could be another day of not having too much movement. We'll just quickly pull up the top gainers and losers of the day. And sectorally, I mean, it's really about stock-specific kind of stories. Godfrey Phillips has continued to get hammered for the last several days. Suzlon finally seeing some profit booking coming in, and that really is the kind of view and mood, right? Some of your PSUs, defense, some of those players not doing too well, not even in rail. On the winning side, of course, you have MGL on the basis of that note. Varun Beverages after the knock yesterday climbing back up, and then a Century and Blue Dart. Yeah.
And Godrej Agro on that edible oils thing as well. Yesterday up and up today as well.
Yeah. I don't know how much it really benefits at the end of it. Maybe more sentimental than anything else.
Yeah, the Motilal Oswal note though, very constructive there. But yep, be that as it may, for now, from Tamanna and me and the team that put this show together, thanks so much for watching. We'll be back with all the action tomorrow, which is the day when the Fed will announce its big decision.